Welcome to today's webinar brought to you by SteelMint Events. I'm Shreya Divakaran, your host for today. First and foremost, I would like to thank everyone here for joining us today for this session. According to the data maintained with SteelMint, Indian pellet export volumes for fiscal year FY20 recorded at 12.62 million tons, up by 38% as against to 9.16 million tons in FY19. China stood as the largest importer of Indian pellet in FY20 at 10.29 million tons, up by 54% against 6.69 million tons in FY19. Strong Chinese buying, which was backed by rising production curves and global material shortage, boosted the Indian pellet export volumes. Major exporters in the last fiscal year includes the RPL, Rashmi Metallics, JSPL, and Kailuan. So talking about the current scenario, Indian pellet export market remains active with prices hovering at about 2-month high levels. Now on to the discussion of today's topic. We're going to be looking at the various trading aspects of iron ore fines and pellets from India to China. A couple of things to keep in mind throughout today's podcast. We will try to take on as many questions as we can, depending on the time limit. So feel free to submit your questions in the Q&A box. However, when submitting your questions, please make sure to share your name and company name as well. And we will share the presentation slides with you as well in the chat box during the Q&A session. So keep a lookout for the same. So without further ado, let's get started and introduce you all to our speaker for today. We have Ms. Susan Zhang, who is the current Vice General Manager of Kailuan Hong Kong Co. Limited, China, with a trading volume of 3 million in 2017 to 2018 and 5 million in 2018 to 2019 under her belt, in which more than 50% trading volume was from India, including all the grades of iron ore fines and some pellets, and rest of the volume was from Australia, Brazil, and South Africa. Prior to joining Kailuan, Ms. Susan was the Assistant Manager and Manager of the Operations Department at Shenlong Resources Co. Limited, with a trading volume of 6 to 15 million per year from 2006 to 2016. And with this introduction, I'm passing on the session to Ms. Susan to start her presentation. Ms. Susan, over to you.
Okay, hello everyone. This is Susan Zhang from Kailuan Hong Kong Company Limited, and I think there are lots of my old friends. We have been doing the India iron ore since 2006, and I would like to share the screenshot with you. Okay, so first the topic today. Topic today is what is driving pellet and iron ore impact by China and how long it will last. Okay, and this is my introduction about myself. And from 2006 to 2016, I was the manager assistant and the manager of operation department in Shenlong Resources. Trading volume is about 6 million to 15 million per year. And from 2017 till now, I am the Vice General Manager of Kailuan Hong Kong and doing the trading from India and also from Australia, Brazil, and South Africa. And we have doing a lot of India cargo. The volume, the percentage of our trading is about 50% from India. We are not the biggest, but we have doing a lot of trading, not only the iron ore fines, but the pellet, and also we have some volume of the pellet and the GPI. Okay, and the next one, and this is our company in Tangshan, based in Tangshan, the group company, and this is our company introduction. And Kailuan Hong Kong is fully owned by Kailuan Group Limited Liability Corporation. It is a specialized company to do the iron ore import and export business with full support by the group. And our Kailuan Group Limited Liability Operation, which established in 1878, which is a very big and old state-owned company. And our registered capital is 11 billion 400 something, you know, this number. So in total, it is a big company. Okay, and first our questions. And this first question is, in the pellet trading, what the Chinese buyers will consider when they buy the pellet? And the second question is the 63.5 grade and the medium grade 61 cargo, low grade of iron ore fines 57 cargo, and the very low grade 55 to 52% iron ore fines in China market. And the third topic we are going to discuss is about why some Chinese steel mills only buy from the spot market, not from the USD cargo. And the fourth topic we are going to discuss is about why some of the traders or the buyers, they needed the financer to issue the LC. And does this situation only happens in India iron ore tradings, or it also happens in all the other countries trading? And the 5 question, which I newly add in my PPT, is, are the Chinese importers facing delays in shipments due to the port congestion or limited labor at ports, and have some orders and shipments got cancelled? Okay, so the first topic we are going to discuss is, in the pellet trading, what will the Chinese buyers consider when buying the pellet? You know, since the India pellet exporting to China started in 2016, the India pellet to China has becoming a very important material in China market. Normally, my friends of the pellet suppliers always ask me a lot of questions about why the market is up and the price are not so good. So there are a lot of aspects going to affect the price and the trading of the pellet trading. So the first of all, definitely everybody knows the environmental protection policy. Usually, it is very strict in winter, and when there are big events like the National People's Congress and the G20 and extra, the big events. So when there are very important events, and when the weather becomes very bad, and the government may start to giving some limitation for the production. So in that time, the pellet price may get pellet price, not only pellet price, but also the lumps price is also going to be improved. And the second main point is because in China, there are some domestic concentrate which the Chinese buyers using to make the pellet. And the trading terms for the domestic concentrate in China is the supplier will sell the cargo and the price to the factory. So actually it is DMT to factory price, including the tax. Normally when the domestic concentrate price plus 30 to 80 RMB cost will be the actual cost of the domestic pellet. The pellet percentage for the domestic pellet will be 63%, but with very low aluminum. You know, the cost of the pellet making varies from 30 to 80 RMB is because some of the factories, they are using the electricity, but some of the factory, they are using their own gas to produce the the pellet, which was coming from the blast furnace. And the other point is the imported concentrate from Chile, Australia, Brazil, Ukraine, Canada, Iran, Peru, and Russia. So when the imported concentrate price are very low, and then it will also affect the price of the pellet. If the price is higher for the concentrate, and the pellet price will get a better support. And also the other very important factor of the pellet price is the profit of the steel product. You know, when the steel product profits are higher, and the price of the pellet may get a better support, so it will be accordingly improved. The other factor is the lump premium. You know, the lump premium, sometimes it is very high and sometimes it is very low. The lump premium is also connected with the profit of the steel product. So the above points, which are all positive correlation with the pellet price. And this is some of the figures which we get from the internet, showing the import of the pellet. And the gray one is the imported pellet in the whole China, and the blue point is the imported pellet from India. And you can see that now in India, imported pellet is becoming more and more important to China batteries. And the total imported pellet in 2018 and 2019. Sorry. BRPL is having 3.3 million in financial year of 2019 and 2.3 million in financial year of 2018. And JSPL is having the export to China for 2.24 million in the financial year of 2019 and 1.61 million in the financial year of 2018. And these are the rank and the exported quantity. So the total export of the pellet to China is 8.19 million in the financial year of 2018 and 13.1 million in the financial year of 2019, which is improved a lot in 2019. And you can see some of the feed proportion on sinters, lumps, and pellets amongst the 64 sampled steel mill. In some of the steel mills, the sinters are decreased, but the pellet portion is improved, which is comparing to the portion of the steel mills. There are a lot of factors affecting why they increase the pellet and why they decrease the pellet. Okay, and now the other topic we are going to discuss is about the medium grade 61% Fe and the low grade of 57 Fe iron ore fines and the very low grade of 55 to 52 point of iron ore fines in China market. everyone knows that the export to China from India is improving every year. In the 2018, the total export to China is 10.6 million in iron ore fines, not including the pellets. But in 2019, the number shoot to 19.1 million to China, so which almost doubled the export to China. I think it's mainly because the 57 cargo are coming to China a lot, but while in 2018, the low grade from India is very less. And for the 63.5 cargo to China, and the 63.5 cargo to China is mainly comparing to the PB fines. But you know, there is very less quantity in last year, and this year there are some of quantities exporting for the high grade to China, but still comparing to the whole imported iron ore fines from Australia and Brazil, the amount is still very less, and the portion is also very less. For the 61 cargo, there is, because of the high aluminum, more than 3.3%, and in the contract mainly showing 4% of the aluminum. So comparing this, the buyers in China normally will give the price idea for the 61 cargo comparing to Jinbuba fines of Australia, which is having the aluminum 3% above. And for the 57 cargo, because it is low grade, but the aluminum is very high. SSF, the Australia FMG fines, is showing the aluminum about 3.5 to 4% aluminum, but for the India iron ore fines of the 57 cargo, it's mainly showing 5% to 5.5% aluminum for showing typical, but in contract, mainly person are writing 6% of the aluminum maximum. And for the 52 to 55%, it is very less actually to be directly used by the steel mill, but most people who will buy this very low grade cargo from 55 below, then they will mainly use it to blend with other materials before they can send it to the factories. And some of the low grade cargo of the 55% below will be bought by the concentrator in the ports, and they need to process before they send the cargo to the steel mills. So in short, normally the low grade 55% below steel mills won't buy directly. Okay. And you know, I have been handling the India iron ore cargo since 2006. So with our representative, Mr. Siegel, we have been doing business with a lot of reliable miners from India. But you know, because of some of the traders, they are giving very bad material, like if they are giving 56% cargo, when the cargo arrives in China and the steel mills take the cargo, it shows maybe 55 below. So everybody is not having a very good impression for the India cargo. But for me, because we have been dealing with the reputed person and reputed mines, so we did not meet any problems. So we are trying to explain to those steel mills and using our company as the guarantee to show them that just buy the cargo. When we give you the cargo, actual quantity will be what we showed to you. And if there is any problem, we are ready to solve it, and we are ready to talk to the mines, and we are ready to solve it with our own capacity. So, you know, but still there are some of the bad rumors about India cargo, which they are saying that it's very bad quality. So, but everybody knows it's not true. If you are dealing with the right person, you will not meet any problem. We are buying from East Coast like MMTC through Baosteel, and we are buying directly from Rongta Mines, and we are buying directly from Jindo, from SL Mining, and even MSPL in 2006, and MEL and Astra. And from West Coast, we were doing directly with Fomento, Vedanta, VMS, Chuguli, and all those mines. They are very good. And we seldom have any problem with them, and they are very good mines, very good people, very good reputation, and we are having very good cooperations together. When I moved to the new company, which I introduced to you all, and this company is also more than 100 years since establishing. We resumed the cooperation with the Indian miners, and most of the steel mills are not faithful with the cargo. We landed the cargo, and we sell spots to the steel mills in small lots, and let them see the cargo, test the cargo before they buy. So now, all our landed cargo, which is having very good reputations to the steel mills. And before, normally when they buy the India cargo, they have to do the test before they buy it. But after we landed for 4 years, and everybody trusts that the cargo will not have any problem, and they have the trust of the cargo, and they have the trust of us. So the question comes again that why it is not like before. The steel mills can buy directly for the USD cargo from India instead of buying the sports from the sports market. I would like to say that because India cargo has been absent for years, about I think 4 years, there is no India cargo trading, but the Australia cargo and the Brazil cargo come to the China market, and the size of the Brazil and Australia cargo is very big, and you know, there are some small steel mills like 3 million or 4 million or 5 million in some small ports like one area, and they could not consume a full Capesize 170,000 metric tons in a month. And they are not going to use only one material. They are going to use maybe 3, 4 materials. So they have to buy the small cargoes in the port. And so from that time, the steel mills start to, you know, have the practical to buy from the sports market. And also the other reason is bank will give two kind of loans to the steel mills. One is in cash and the other is in USD. But you know, the most steel mills prefer to take the cash instead of the LC because which the cash is more easy to be used, more convenient and more economic to them. They can use the cash in everywhere they need to contribute. So that is also another very important reason. And the third, but also very important reason is, you know, to take a decision and the responsibility for making a decision of buying a whole cargo normally will be the very important person to make the decision, especially in the small steel mills. And the boss or very trusted person, professional person in the steel mills. Profit of the steel mills are very, very good these years. So some of the the steel mills will say that we have already enjoyed our profits for making the steel. So let's don't bother ourselves and make the decisions for the market. So we will just buy as per the sports price, whatever they are giving in the port, we'll just buy. We can decide to buy 10,000, 2,000, 20,000. So from then, the big traders start to do the job for landing the Cape-size vessel for Australia and Brazil. And then the steel mills will just buy the spot cargo and earn the steel making profit. So now the current market in China is the big traders like PSU, Xiamen ITG, Hangzhou Cogeneration, and Xiamen Xinda, and a lot of other big state-owned company who have sufficient financing, and they will do the landing of the cargo for the steel mills. And the steel mills will buy like 20,000 PP5s, 30,000 SSF or FB, and then they will buy maybe some small parts of the lumps, some of the concentrate. And so in this way, it's more easy and economic to the steel mills, which is becoming practical till now. So in this way, also, it's not only for Australia cargo or Brazil cargo, but also for India iron ore fines. Not only because they do not have a good understanding of the India iron ore fines, but also because it is practical. Okay, and for the other one, okay, this is why the Chinese steel mills only buy from the sports market, not the USD. But you know, there are some of the small steel mills located in South China. There is no spot cargo because the traders, they would not like to land the cargo in a small ports. They would like to land the cargo in like big ports like Tangshan area, Jintang, Caofeidian, and Shandong area, Rizhao, Qingdao. Because in those areas, not only the traders are landing, but also the mines like Valley, FMG, and also Roy Hill. They are also doing the landing of the cargo for the steel mills to buy small lots. It's more flexible and convenient for the steel mills. Okay, and the other question, and why some of the traders, or why they need the financiers to issue the LC. The fact is, some of the big state-owned company, they have a lot of bank facilities because they are state-owned, and the banks are also state-owned. So they have the bank facility, but you know, because the state-owned company, their internal risk control department is very strict. So they can have the facility, but they are not allowed to take any risk. So those people, they will become the consignee or the financer or the agent. And but some of the small traders who want to take the position, but they want to do the business, but they do not have the bank facilities. And to apply for the bank facilities in China is not very simple. So you have to have a lot of relationships, and you need to give a lot of guarantee, which is not possible to comply in a short time. So those people who are ready to take the position and who want to do the business and not having the facilities, they will ask some of the financiers to open the LC for them. But in between the financer and the consignee and the consigner, they will have some contract themselves, and the consigner is going to pay a deposit to the consignee, and they will pay a certain interest to the consignee, and they will have a separate agreement in between themselves. But the consignee the consignee, after they receiving the deposit from the consignor, and the consignee will sign the contract with the supplier, and they will issue the LC, and they will handle all the other documents drops from the supplier. And the consignor will do the sales. I mean, those people who is giving the work to the financer, actually they themselves, we can call it a consignor or the end buyer. They will do the sales in the China market, and they will bear the risk, and they will enjoy the profit. That is how it happens in the China market. And in the other question is, does this happen only in China iron ore fines or iron ore trade trading? This is not only happening in India iron ore trading, it also happens in Australia and Brazil. Australia and Brazil cargo is a Capesize vessel, and they also need a lot of big financing support. So it's very normal in China in iron ore trading market. So normally we say as a supplier, they will be very much concerned about how fast it is to issue the LC from the China banks, especially after the virus. Normally, if the LC is issued from China mainland, it takes about 3 to 5 working days after the financer gave all the documents to the bank. After not only signing the contract, they need to submit the document to the bank. And some even takes longer. But you know, in some special cases, like who will have the Hong Kong or Singapore bank facilities, and they are able to issue the LC from Hong Kong or Singapore, say within 1 working day after they countersign the contract. But in most cases, no one will agree for a short time LC issuing, like 1 working day or 2 working day, especially due to the bankruptcy in Singapore of some of the oil companies. Now the banks are very conscious to issue the LC. And in Hong Kong and in Singapore, it is very difficult to issue the front-back LC nowadays. Okay, another question we're going to discuss is are Chinese importers facing delays in shipments due to port congestion or limited labor at the ports? Actually, in China ports, even during the curfew in China in March, the port congestion is there, but the labor actually is not so limited. But actually, we were managing the discharging as per normal process. And also, we will also consider about how some of the orders and shipment got cancelled. You know, like we'll see the reasons. And the one very important reason is, you know, because India cargo are sold in fixed price mainly to China, very less indexed price. So some of the traders like us, when we buy the cargo, we want to sell to the steel mills in USD directly, and the steel mills will prefer us to sell to them in index cargo. For example, a shipment with Laken from 1st to 10th June with LSD by 30th June, the buyer may purchase. The steel mills may purchase, and they want to settle the price in index in July plus. We call it arriving months, NOR months, QP. when immediately we sell the cargo to the steel mills, and they should have done the hedging in paper for July swaps. But if in any case that the cargo could not be delivered in June, it may be, say, delayed in July, that means when the cargo arrives and the steel mills want to settle for the price in the arriving months of the cargo, it will not be in July. It might be in August, So there is a very big chance that when you are fixing the cargo in July and you are losing the money, and you have to hedge it again because of the delay, like from July to August. Then you have to hedge, you have to buy July and sell August on the papers. So that is causing another cost. So it might be $1 when you are selling the cargo, but when it delayed, and the difference might jump to $4 when the period approaching. So this is why it is important to deliver the cargo. I will show you the swaps on the papers, and this is some screenshots on 6th of May when the Dalian exchange is 678 on that day, on that moment. And you can see the June-July difference is 1.5 USD. But when the time approaching, say today, the June and July price difference is 2.25. And there might be a very big chance that for the June, July, and for the May, because the May index will jump to 60 to 96. So that means you are going to lose a big money for that. And that is why the delivery time is very important to us. And the other reason is because the steel mills who is buying the whole shipment, and they may not be able to buy the spot cargo like in Tangshan or in Shandong, those people who is purchasing the whole cargo because they want the cargo go to their small ports, like going to Baiyuquan, going to Jinzhou, where there is no spot cargo available. So if you are delaying the shipment, that means they have to purchase another cargo in the port at the same time, and they have to deliver the cargo from the big ports to the small ports, and increasing their actual cost. So by the time when they were buying the cargo, the Pellets is $80. Say the 57 cargo they purchased at 57 USD. But when you are delivering the cargo late, and the market may jump to 90, and they have to pay a higher price to buy the current market, and then they have to shift the cargo to their port. So this is going to cause big problem for the steel mills who is handling the USD purchasing, and they may got blamed or they may got fired even. So what our conclusion is, try to maintain the delivery time. Otherwise, not only the buyer is going to suffer, but also the supplier, is not also going to meet problems. Okay, I think that is all. And we are having another question which we want to discuss.
Yes, we will start the Q&A session now. To start with, Ms. Susan, could you tell us how the overall steel scenario is in China, demand and production wise?
1 minute. Sorry, you said?
I was asking how's the overall steel scenario in China is, demand and production wise?
Demand in production in steel mill.
Yes. How's the overall steel scenario in China?
I think now the steel, because there is a Congress in China in May, so actually the price of the steel product was improved about $100, 100 RMB. So accordingly, the profit is also opened up, say about 500 RMB per metric ton. So before it's almost losing money in April. So now the profit is improved, and the pellet price and the lump price are also getting improved. I think in end of April, because of the shutdown in India and also the deduction for the product in India, there are lots of pellets exporting to China at a very low price, about 100 something. But now recently the pellet price also improved to about $10, say about 108, 109 fixtures last week, and this week will be about 110 or to 115. This is the current level.
So to just update everyone, I have updated the presentation. We have provided a link in the chat box for everyone with the presentation. You can download it through that link. So moving on to the next question, Ms. Susan, do you believe there will be a possible supply disruption from Brazilian suppliers, and how will it be impacted?
Actually, everybody is worried that Brazil is going to decrease their supplies to China. And also last month, people are worried that because of the shutdown in Europe and in US, so the supplies for the iron ore fines and the pig iron, pellets, it's all going to China. And that is going to affect the whole supply chain. But I don't believe, because even during in April and in May, when the virus comes and the curfew comes in India, there are some delays in India. But luckily, all those mines, they are able to solve the problems with the ports and with the government, and the government is allowing them to export the cargo, right, from India itself. So for Brazil, I think it is the same, because if India people can do it, and I think the Brazil, the mines, they can also handle with the government, and they can go to the substitute workers to replace those people who might have the health problems. So for me, I don't feel Brazil is going to, just reduce sharply from the supply. I don't think so.
So the next question I'll raise from Mr. M.B. Subbarao. He wants to know, what is pellet premium between low and high alumina pellets? What is the average percentage of pellets used by Chinese steel mills currently in blast furnace steel?
In first question, the low aluminum. Before we answer the question about the low aluminum, we have to consider about the position of the cargo which you are going to supply. Because the pellet itself, the treating is mainly handled by the traders, not the steel mills. There is a short time in April that a lot of steel mills are buying directly for the pellet, but mainly it is traders who is having a lot of financing support. They will buy and do the trading. But the thing is, when you are landing the cargo to the big ports, like in Tangshan and in Shandong area, where there are sufficient imported concentrate and in domestic concentrate with low aluminum supplies. And then the aluminum is not a big factor for those steel mills around those areas. But for those low aluminum in the river port or in the South China port, positions, and it's difficult to get the low aluminum material, then it will be very important for them, and they may ready to pay higher premium for the low aluminum. But to the North China port, I don't feel.
And what is the average percentage of pellets is used by Chinese steel mills currently in the blast furnace?
The percentage, I think the highest percentage the steel mills using is up to 15%. But normally now I was talking to those steel mills, they were saying about 8%, 8% to 10%. It's also comparing to the lump, you know, if the lump is more economic, then they will use more lump. And if the pellet is more economic, domestic pellet, and they will use more domestic pellet. And in North China, steel mills in North China, they have a circle of their productions, and they can have enough of the domestic pellets producing. So they normally using their own domestic pellet producing.
So the next question is by Mr. Narendra Mishra. He wants to know, how do you see Chinese pellet import volumes in CY20? And also, on which all countries do you depend mostly on high-grade iron ore fines?
Pardon the question?
How do you see Chinese pellet import volumes in CY20? Also, in which countries do you depend mostly on high iron ore grade fines?
High iron ore grade fines mainly is from Brazil. Brazil 65% PLC. Sorry, not PLC. LCG fines. But you know, Australia, they are having the PB fines, micro fines, and now especially the Royal Hill fines is also becoming a very famous brand in China now. This is the medium cargo, say 60 to 62%, and new mine fines.
How do you see?
And Chinese? I mean, if
And how do you see the Chinese pellet import volumes?
Pardon? I didn't get you.
How do you see the Chinese pellet import volumes in CY20?
Pellet import volume is actually increasing. Actually, not only from China, from India, but also from Brazil and also from Australia, Ukraine. And there is always pellet exporting to China, and the steel mills are using, and you know, they buy in small lots in the port.
So the next question, it's a common question between Mr. Tapas Padi and Mohit Garg. They want to know, what is your short-term outlook on iron ore fines and pellet imports in China, considering new COVID cases there?
Everybody, you know, when they make some judgment and anticipation for the market, and from the next day, the market will give you a slap on your face, say you are not right. So better don't judge the market, just follow the market. The price difference expecting between 2.5 aluminum and 3%. Actually, this is really varies, because if you are selling to the North China port, this is not going to be a big issue. They will balance and adjust with their domestic low aluminum pellet, and also they have the low aluminum, like South Africa lumps, and you know, they have a lot of ways to adjust the aluminum. So to North China port, to North steel mills, the aluminum is not so important, but to South, it is important. So you have to find the right buyer.
So the next question is from Mr. Deepak Bhatnagar. He's from PMAI. He wants to know what are the benefits of using pellets in Chinese blast furnace.
Using the pellet and increasing the pellet using in the blast furnace is mainly to increase the steel production. Like when you are using high grade of iron fines, high grade of raw materials, you will get more steel production, right? So that is in some special periods when there is enough profit for you to able to buy the high price cargo and get a better profit. So just to increase the steel producing.
Mr. Puneet Arya wants to know what is expected price difference between 2.5% alumina and 3% alumina pellets.
I have answered that question. So actually, it's not very important to me as I am the main trader doing the trading in North China. So that price difference will be for South China traders. I think it should be around $2 to $8. Also varies about the FE. You need to consider the FE difference.
So the iron ore and scrap prices are both increasing, on increasing trend. So do you expect a shift in purchase pattern of steel mills?
It depends on how long this is going to last. You know, if the high profit is going to last for long, and there will be a lot of steel mills who is ready to use more lumps and who is ready to use more scraps and more pellets. But you know, when the profit is less and the steel mills will use less of the high grade and use more of the low grade. That's it.
So we have been hearing Indian high-grade iron ore fines, Fe 63% export deals getting concluded actively in the last 1 month. So is that correct? And could you share some details and whether it will sustain?
I think the 61 plus trading from India to China has been dramatically decreased in 2019 because of the price for the low grade is better and without tax. So I think from last month, the 63.5 cargo becoming to export to China. I heard mainly from SM Mining and SM Nayart. But SM Nayart is not a directly mining company. SM Mining is a directly mining company, and they are doing the exports to China market. They said that they will keeping on exporting the 63.5, and we wish that will happen. And we also wish more of the mine companies can join the team of the high grade exporting to China, so that we can give a compete with the Caladias fines of Brazil.
So on to the next question. It's by Mr. M. Ramachandran. He wants to know why China does not have any DRI plant.
DRI plant is mainly using the gas, right? But you know, in China, the gas is not sufficient to cover all the costs. You know, because in China now everybody is using the gas in the house, and the gas we are importing from outside. So to use the DRI is not simple, only to establish a factory and use it. So you have to get the energy, cheap energy.
So next question is from Mr. Bhomik Bhatt. He says since last 2 to 3 months, steel sale must be down. So what are China's future plans is for stockpile up? Particularly, what shall be steel sale policy will be for exports, especially to Africa?
Pardon? Come again.
So he says since last 2 months, the steel sale must be down in China. So what are the future plans for stockpile up in China, and particularly what shall be the steel sale policy will be like for exports, especially to Africa?
In China, actually the steel consumption is mainly in the China mainland. It's not depending on the export. And the last 2 months, the steel trading in domestic is very low. It's mainly because the buildings are not allowed. The projects are not allowed to resume after the holiday. But now, when I was traveling to some other city by car, I saw a lot of the steel products are going on the tracks on the highway. So China government was encouraging the economic by free payment of the highway for about 2 months since the virus happens, and it ends by end of May. So there's a lot of projects already opened. So now the economic in China has been, I think, not to the normal stage of the economic, but we can say more than 50% of the economic has been recovered. So it's going to be better and better, and the steel mills are not worried about the steel sellings now. So. And the export is very less partial, so it's not so important to us.
Mr. Saurabh Rai asks, do we expect price rally in iron ore price in the second half of 2020?
As I said, I cannot give anticipation for the market because every day when you give and then you are you are getting a different idea. So what we do is we just follow the market, and when the market is at 100 level, we accept 100 level. When the market is 50 USD level, then you just accept the USD as a 50 USD level. That's it.
So Mr. Yash wants to know, I think this would be the last question for today. Mr. Yash wants to know, the iron ore port stocks are decreasing. So how do you see it affecting the near-term iron ore price expectation?
Actually, when you are talking the iron ore stocks, then you have to consider when and from where and which date you are comparing. So if you are saying that it's decreasing, yes, it's decreasing because the steel mills are buying more. Because the USD cargo now comparing to the RMB cargo, the RMB cargo is about $2 to $3 cheaper than the USD cargo. And when you are buying the USD cargo, the USD cargo is taking time to arrive. So that is why the stocks are decreasing, because the Dalian exchange yesterday is very high. So I think about millions of tradings have done yesterday, and also for our own company, we have sold about 120,000 iron ore fines of low grade 57 cargo yesterday only. So that is a record in our company. I think it's also going to be same to other companies. When I was calling Glencoe, and Glencoe was saying, don't call me, just say you accept it or you don't accept it. So that's depending on, does this affect the near-term iron ore price anticipation? Everybody is very calm in China market. All those people who is aggressive to make more stocks has already disappeared. So those people who is still on the market now is very calm and very professional, and they will not buy more because the price is cheap, and they will not, they will just maintain a stable trading volume. And the price anticipation, I mean, you know, when the price is very high, everybody wants to sell. But for the Chinese traders and the Chinese buyers, they will be saying, no, let's wait and see the market may drop. So, I mean, it's not an easy job. When you want to sell and you sell all, it's difficult.
So, possibly a last question. This would be from us as a host. So, is there possibility of Chinese government announcing a stimulus package at May Congress to boost steel sector? Mr. Nirmalaya Dev would like to.
I didn't get you. You said?
Is there a possibility of Chinese government announcing a stimulus package at May Congress to boost steel sector?
Yeah, I think Chinese governments and all the other governments in the world are trying to give a favor to all those companies and all those people who is trying to resume their works. And you know, I mean, the tax decreasing is happened in the service field. I think the service, the tax was about 3% in the service before the virus, and now it's only 1%. And also the Chinese government is giving, say, you can pay your labor's insurance in the next half of the year, not this year. And you know, the government is trying a lot to make everything, I mean, less burdens for those companies and the small factories to resume, and giving loans free at a lower, not free, but a lower rate to those factories and to those companies. Yeah.
Thank you so much, Ms. Susan. It was a very interesting session. Thank you for joining us today. So everyone, I have again shared the link to the presentation of Ms. Susan in the chat box. You can all download it from there. Thank you so much for joining us today. See you in the next webinar. Thank you.
Thank you. Thank you very much. Thank you. Bye.